Hey, what's up, stock compounders? Brad here. Today I want to talk about Robinhood, and particularly my big problem with Robinhood. Um, so I have two different accounts. I have one with TD Ameritrade, and I have one with Robinhood. And on my Robinhood account, I bought, five stocks for my Magic Formula investing portfolio just like a week and a half ago. And you guys, it is driving me nuts. I am getting notifications on Robinhood like every day for these stocks. Because I think if a stock moves up or down like 2% or more in a day, you automatically get notified from Robinhood. And the stocks I bought, they're small stocks in the way of public companies. They're about $500 million in market cap on average, the stocks that I bought. So, it just got me thinking, my big problem with Robinhood is that it promotes activity, okay? Now, the idea behind Robinhood, I love, they're on a mission to democratize finance, right? They've forced these bigger platforms to do away with trading commissions. These companies were charging like $10 every time you wanted to buy or sell. So it's great that the commissions have come down. There's no commissions on Robinhood, and it seems like all of the big brokers have also done away with commissions. But I want to read something from Robinhood's website that I'm questioning at the moment. And one of the things they say is, they stand for individual participation in equity markets. They want to kind of reduce lower the bar for people to be able to participate in a fair way in these equity markets. And it says here, the stock market is one of the best available tools for individual wealth creation, generating annual returns of around 10% over the past century. Now that's true. Now the caveat there, these 10% annual returns are based on, if you put your money in and, you don't make any active moves, okay? You're putting it in kind of automatically each quarter. You're not trying to time the market. That's what this 10% number is based on. It's based on kind of the long-term performance of the US stock market. Now, I can't help but think Robinhood is really promoting trading. It's promoting a lot of activity. And really the number one advantage that we have as individual investors is to have a longer time horizon, kind of incorporate this principle of patience into our investing, to buy great businesses or even the entire market. In the case of great businesses, buy when they're trading at fair or cheaper than fair in terms of stock price, and to hold, to let the company make you money over time rather than trying to get in and out of stocks, at opportune moments. So, it's a big issue I have. I wish I could find a way to turn off notifications because I don't want to know all of the wiggles that are happening with my individual stocks. I don't want to look at those stocks for another year at a minimum, okay? So I have to figure out if that's possible with Robinhood, to turn off notifications, even to just hide those holdings in my portfolio. So if I'm looking at other things, things that are on my watch list, kind of waiting until they get into my buy zone, I don't want to see these companies that I just want to forget about for a year or more. So I'm not tempted to do something in the meanwhile. I want to mention a few things here about this value of patience in the stock market. So Warren Buffett, one of the reasons that Warren Buffett, I think a big reason that Warren Buffett lives in Omaha is because when he was living in New York City, he was getting bombarded with stock ideas. And it just takes so much energy to push these ideas away, even if that they're obviously not compelling. There's actually a large energy toll that it takes when you have these signals coming at you that you have to make a decision about. So Warren Buffett, one of the things that has really made him successful is to have this separation from all of the activity of Wall Street. He can read all day and ignore the noise in the markets, because so much of what makes up the markets is noise. It's intended to get you to do something. And Buffett also mentioned the punch card approach to investing, where most investors would do much better if they had a punch card with 20 punches, and your entire life all you get to do is make 20 investment decisions. It would really force you to think long and hard about which decision, which investment you wanted to punch out of the card and actually act on. There's a great book, I've talked about it before, 100 Baggers by Chris Meyer. Stocks that return 100 to 1 in the stock market, and how to find them. And it's a fascinating book. He spent hundreds of thousands of dollars to get the data to actually identify these 100 baggers within the last 50 years. And he found 365 such companies where the stock returned 100 to 1 at some point within the last 50 years. And the average time it took for these 100 baggers to reach 100x was 26 years. Okay, so it just goes to show you the power of having that patience to buy in to a great company and do nothing. Buy in and let it sit. Let the company make you money. Buy into a company that's a great business at the right price, and then let it do its thing. So, just drilling that into your mind, that the average amount of time it took for these 100 baggers to return 100 to 1, 26 years. Okay? We'd all do well, I think, to be more patient with our investing portfolios. Yeah, I don't have too much else to say, guys. It really is the number one advantage in investing, is to have patience. Buffett, I mentioned recently a quote that I love from Buffett is, "The stock market is a tool to transfer money from the impatient to the patient." Okay. So I'll leave you with that quote. And, I'm going to be exploring whether I can kind of customize the notifications I get on Robinhood, or potentially kind of hide portions of my portfolio so I'm not tempted to act on, these price swings, because I really have no interest in acting on those. I'm buying these stocks with the intention of being a partial owner of that business. And so, I don't want to be emotionally swayed to act when I know that it's not in my best interest to act. So I'll leave it at that, guys. Let me know what you guys think about these newer trading platforms, and how they're built to get us to act, and what impact that might be having on particularly millennial investors that are kind of getting involved with investing for the first time, and how it's impacting their approach to investing. Curious to hear from you what your thoughts are on that. All right, guys, I'll let you go, and I'll see you in the next video. Take care.